Hey, FreightWaves fans and friends, welcome to Monday. Monday, Super Bowl, maybe a little Super Bowl hungover, the lowest scoring Super Bowl in NFL history. Snooze fest. Anyway, I went to bed early, so I'm feeling refreshed, and it's great to have you here. We have not one but two market experts, none other than Nick Austin bringing us the weather. It's varied, it looks like so far, and the all-purpose Sultan of Sonar bringing us things on market share, on economic data, and he might even try his hand at a little weather. We'll see. So hey, Nick, welcome.
Hey, Chad.
It's great. It's great to be here with you.
I'm not feeling quite as refreshed this morning. Not as you, yeah.
Sorry.
Unfortunately, I stayed up and watched the whole game.
But, well, paying the price now. But here you are, and what is happening? It looks like a lot up here.
Yeah.
Polar vortex gone?
The polar vortex is pretty much gone for now, yeah.
Okay.
It's still pretty cold up in parts of the north, but it's been kind of icy in parts of the Midwest, like the UP of Michigan, Marquette, Sault Ste. Marie, those areas, northern Wisconsin. So that has most likely caused some travel problems this morning.
Yeah.
Sleet and freezing rain and icy roads, probably delays up there. So that's not good. That's fading away now, but that's certainly been a problem. And as we're looking at the radar earlier, look at what's happening out west.
Look at all this. I mean,
know.
the snow lovers just must be having themselves a season.
Ooh, folks at the ski resorts, yes. Except it's tough to get to them if you didn't get ahead of the storm, because this snow has been on and off all weekend. It's been picking up again today, mostly across the Sierras and Eastern California and some parts of Western Nevada. So just over the weekend, over the last 2 to about 2.5 days, some parts of the Sierras have seen 6 to 8 feet of snow. So these are mostly in resort areas, but they're also in problem areas right on I-80, which is a route that's used by a lot of truckers.
Okay.
I-80 through Reno and Lake Tahoe area right into Eastern California. And chain controls were up, and there were a lot of delays at times on I-80 because truckers weren't able to get traction. And so there were a lot of delays and problems, and that's going to continue today and tomorrow.
Wow.
So yeah, lots of problems out west.
Lots of problems out west, just kind of rainy here through the Midwest and down to the southeast, it looks like, right?
Yeah, little spots of rain, some fog in the southeast, but other than that, the main issues are going to be out west really for the next couple of days with all that mountain snow, and also the snow levels are falling in some parts of Northern California. So right along Highway 101, which is pretty close to the coast in some parts of California, the snow level is going to be dropping down 1,000, maybe even just 500 feet. So a lot of low-lying areas that don't usually get a lot of snow could get some light snow as well.
Wow.
And some valleys, foothills could see some heavy rain and flooding off and on from rain. So lots of problems out in California. It's not quite falling into the sea yet, but a lot of weather problems.
Wow. Well, at least they're experiencing some precipitation at all, which I'm sure they'll take. Thank you, Nick Austin, for bringing it to us pretty much each and every business day, just as we're doing it on FreightWaves Now. And now, without any further delay, let's bring you the Sultan of Sonar, Zach Strickland. Come on, man, what do we got?
Hey, Chad. Hey. So, wake you up. So we got the outbound tender market share map pulled up here. This is the weekly change in outbound tender market share. As we all know, this is a derivative of volume in the market overall.
We all know that.
We all know that by now. All the FreightWaves fans and family have already figured that out.
A derivative of volume, which we have talked a lot about volume.
Yeah, we've talked a lot about volume.
So it's got the market share bears relationship, and we're seeing a lot of heated up areas, right? And no longer right up here in the Midwest, where it was stuck in that polar vortex.
Last week, ironically, we had some of the highest volumes, or the increase in volumes, in the Midwest. This week, it's turned to red, except for the Chicago market a little bit, which is the biggest market in the region. But last week we were talking about Indianapolis, Columbus, Michigan markets and all that. Yeah. Some of the the biggest increases week over week. Now we're seeing those come back down. What we have noticed, though, is down here in the southeast, these markets like Chattanooga, Greenville, Nashville, all these markets right around here have turned up in terms
Oddly
of volume.
enough, though, not Atlanta?
The biggest market in Atlanta
Strange.
is still sitting there without any significant upswing or downswing, mind you.
Maybe a little Super Bowl hangover for them.
Maybe they didn't want to go in there and watch that boring game. But the but you've got areas like Harrisburg, the biggest market in the Northeast region, Chicago, the biggest market in the Midwest, and LA sitting over here, biggest market in the West.
Hot.
Kind of all pulling the region's weight. But the Southeast is the one where all the markets surrounding it are the ones that are
blue.
Yeah, it's more evenly distributed in the Southeast versus these other areas of the country.
Yeah. Okay. Interesting observations. Thanks for pulling that up for our FreightWaves fans.
Yeah.
Right now is what's happening.
Right now.
What else do you got up your bag of tricks?
So the next map, I've got the head haul index, just to kind of add a little bit of color to these outbound volumes, because just because a market's heating up on the outbound side doesn't necessarily mean that it's going to be destabilized in the overall market.
Help explain it to us. I know that there are a lot of FreightWaves fans that probably do understand this, but it can get confusing real fast, like the difference between backhaul and head haul. So what is the head haul market?
So the head haul market index measures the relationship between the outbound and inbound volume. So it's outbound minus inbound. So on the head haul index, that means that if you have a positive value, there's more outbound than inbound. Conversely, if you have more inbound volumes, there's more inbound than outbound, making it a backhaul market, such as Miami, Seattle, Phoenix. They're all traditional backhaul markets. There's a bunch of freight going in without a lot of freight going out. Carriers do not like this kind of market because their trucks go into these places and they can't get back out. So asset utilization very low. They have to deadhead, which means they don't have a load in their trailer. They have to deadhead out, which costs them a lot of money.
So head haul markets are sexy. We are digging the head haul market.
Yes, so you see LA, still a pretty significant head haul market, but you see up here in Stockton, very backhaul. But what I wanted to point out is the Southeast actually is seeing a little bit of imbalance here in February. It's showing more outbound loads and increasing at a faster rate than the inbound loads are. So there is the chance that this could show up in a tender rejection or some form of capacity destabilization over the next week or two.
Okay.
It tends to lead the market. Now, I don't know if there's enough weight here. You see these blues are very light colored. But I think the most interesting thing about this, you look up here, Chicago, Harrisburg, these two markets that you saw as blues on the other ones, they're white. So those are kind of your big markets. So they're seeing as much inbound as outbound over the last week. Whereas,
I see. But a lot of this is similar to the market share that you just brought up.
it looks similar right now, but it doesn't necessarily have to be.
Okay.
And just to kind of illustrate this, if we go to my next chart, pulling up I'm going to kind of put this into volume perspective, so you can just see clearly. And I've got some of the Southeast markets. This is the outbound tender volume index for
Chattanooga in white.
Chattanooga, our little home city. Get a little home cooking going. And then we got Nashville and Greenville, Spartanburg markets. And coming out of the new year, these markets all kind of showed up a little bit, a little heated after cooling off throughout the month of December. But now we see this trending up.
For sure.
Things are kind of picking up out of these markets. And it's got a long trend line to it. You see this you can see things are kind of picking up throughout the month of January, whereas a lot of the country was coming back down. Now,
so is this particular to these markets here in the Southeast?
The Southeast tends to heat up faster, both literally and figuratively. You get volumes kind of picking up in the Southeast a lot faster because the weather does have an impact on freight movement.
Okay. So it's a market indicator of some kind.
Yeah. I think it's actually kind of a big deal that these are starting to pick up in early February, whereas normally you see this kind of trailing towards the end of February, early March. Things really pick up in the Southeast before the rest of the country kind of comes back online.
Wow.
Yeah.
Awesome. Okay. So that is the news such as we're seeing today, or was there one other thing that you want?
One more thing.
One more. Man, you were you were wearing a lot of hats today. So versatile. So versatile. Yeah, that's right. This is the economic stuff that we got some more information.
Yeah. So this is the Purchasing Managers Index, which is, if you watched our show last week, this is kind of a broad macroeconomic indicator of the general health of the economy in the United States. So what this does is it's kind of like GDP. So
And it's government data.
Government data. Well, it's actually, these guys are outside the government. This is a private. It is not your government. These guys are private. And any value over 50 indicates that there is an economic, it's positive. Economic expansion is happening.
That's right.
Any value under 50, like we saw back here in early 2016, is kind of a sign of economic contraction. And what that is, they survey all these big companies, executives from big companies,
yes,
and they ask them, how positive is your company doing? And if over 50% of them respond in a positive light, that's how they push the value up on the PMI. Now, you'll see in December, we saw this big drop. Well, it just came out that we're going to see a value bounce back up here in the next day or two to 56.6, which is kind of contrary to a lot of what kind of this momentum to the rest of the economy that we were hearing about over time. It's kind of like, well, everything's kind of slowing down, government shutdowns, economic slowing, etc. And we're about to bounce back up to a 56.
But what is so this actually is only through October. So
no, this is actually through December.
Oh, it is.
Yeah,
I see.
This is December. Okay. We're going to see this January value show up here in the next day or two.
Okay.
And it's going to have a 56.6 value, which is a very good sign in terms of the fact that we have been thinking that the economy was kind of cooling off.
Yeah. We were seeing a lot. We've been seeing a lot of headwinds. There's been a lot of concern. We still think that 2019 is probably going to be a more normal year, right, across the board.
And our chief economist actually said that a lot of the growth was in new orders, which is very significant. That's really good for freight because that means that they're actually going to be moving these new orders through the freight market.
Okay, so even though it's self-evaluation of how things are going, it seems to be a pretty dependable index.
It's pretty strong. I would say it's got a lot of correlation with the freight market.
Awesome. My goodness. Well, thank you, Sultan of Sonar. Thank you, everybody. Thanks for tuning in. We are here. If you haven't caught wind of it yet, each and every business day, helping you get a little insight on how to prepare for the freight markets on a daily basis. So that is why we are FreightWaves Now. You can check us out on FreightWaves.com and even on Twitter. You'll find us. We're giving you all kinds of great data. And even though it is daily, the data is useful for usually several days, depending on the kind of data it is. It could actually be useful for a week or even a month, depending on the kind of stuff we're looking at. So thanks for tuning in. Hope you're having a better Super Bowl post hangover Monday than a lot of people. And we will see you tomorrow. So, be safe out there and don't worry. Be happy.